Hi, everyone. My name is Grant Froese, the CEO of Harvest One, and I'm here with Andy Kane, who's our Chief Operating Officer. And we want to thank you for joining us on this call today. This is my first opportunity to speak to you as the new CEO of Harvest One. I joined the company, we joined the company 5 months ago, primarily because I felt Harvest One had a solid foundation with very underdeveloped assets. I chose Harvest One primarily because of its international presence. Second, it's a multi-divisional company that operates in multiple jurisdictions. I saw the opportunities ahead to leverage both the synergies between divisions and the brands we sell. So before I go any further, I just want to address our share price performance because I'm sure it's top of mind as it is with us. And it's clear to everybody on the call that our share performance has underperformed this year, and it's due to a variety of reasons, in my view. First of all, the sector has been down as a whole since legalization. And then reports recently around the sector as a whole are getting some negative reviews, which doesn't bode well for any of us in the industry. And lastly, the MMJ divestiture didn't help. MMJ, for those of you that don't know, is our largest shareholder, holds roughly 30% of our outstanding shares. And while this event was driven entirely by liquidation needs on their end, to investors it looked like MMJ lost confidence in Harvest One. But to the contrary, it is not the case, and it was clearly spelled out in a recent announcement from MMJ, saying that they have confidence in Harvest One, the management team, and our go-forward strategy. So since we've started, we've had to undergo significant due diligence on each of our divisions and assets to determine which to move forward with and which to drop. We've overhauled senior management, and we've added key leaders across all divisions and the subsidiaries. This internal work has kept us quiet for the first few months, but we're now at the point where we can start providing more updates. You'll be hearing a lot more of us in 2019, which is going to be a very transformative year for Harvest One. I know the work that we have been doing will pay dividends when companies are valued for their fundamentals and financials, just like any other traditional industry. Excuse me. So I'd just like to, first of all, speak to some of the 2018 highlights, and there have been quite a few. And it's important to note that we've had significant success in 2018. Included in that is we've completed a $40 million financing in February. The company converted outstanding debentures, removing debt from the balance sheet. We acquired Dreamwater, which is now contributing significantly to the bottom line. We received our dealer's license, allowing for the import and export of medical cannabis products. And we've secured favorable results from Satipharm's phase 2 clinical trials for the treatment of epilepsy in children, making it one of the most advanced medical products in the market. We acquired PTL, which further strengthens our research and development capabilities and gives us access to vital IP for new formulations. And we've made key strategic hires across all divisions and verticals, including Will Stewart, who has been voted one of the top cannabis influencers in the country. We launched an advisory board, which includes David Hyde, the top security consultant in the industry. We also launched our retail vertical with a 20% investment in Verve, a BC-based private retailer. And we've increased our average harvest yields by more than 50% in the last 3 months alone. We signed an extraction agreement with Valens to kickstart product development, including pens, oils, and edibles down the road when they become legal. And we appointed Frank Holler as our new chairman of the board. And Frank is going to be a great addition to the team with all of his capital markets and pharmaceutical experience. We reported record financials in Q1 2019, $1.7 million in revenue, representing almost 900% increase over the same period last year. We have $48 million in the bank, which means all current expansion plans are fully funded, and we have significant funds for accretive acquisitions and joint ventures. And finally, our legalization rollout has been a success on all fronts. We have supply agreements in place with 4 separate provinces, including British Columbia, Ontario, Manitoba, and Saskatchewan. And importantly, we met all initial load-in commitments to the provinces for October 17th and have met all subsequent obligations, making us one of the few LPs to satisfy agreements to date. And as a result, a survey in late November indicated that we are one of the top brands for sales in British Columbia and in Ontario. And from my experience with Loblaws, it's this type of execution that builds the basis for strong long-term relationships with both provinces and retailers. And we've received excellent product reviews, and we've consistently been mentioned amongst the best LPs. So as we look past 2018 and towards 2019, we think the future looks bright for Harvest One. Although cultivation will remain a pivotal part of our strategy, Harvest One will focus on creating derivative value-added products such as oils, vape pens, creams, beverages, and more. We'll leverage our experience and network for distribution as this industry continues to evolve and starts to resemble industries that I'm familiar with in CPG and retail. Here's what else you can expect to see from us next year. We're going to continue to develop a global house of brands. We're aiming to be cash flow neutral in 2019. We're rolling out Satifarm's newly reformulated gel pel across the UK, the EU, and beyond to North America as well. We're bringing a CBD version of Dream Water to the market in Canada when regulations allow, and the US as soon as formulations are made. We're increasing Dream Water distribution across North America and beyond, and I'm happy to say that the team has just secured product listing across North America's largest retailer, which is Walmart. We continue deals that secure additional supply to further our product development strategy and our goal of being a global house of brands. I'm now going to hand it over to our COO, Andy Kane, who will give an operational update on each of our divisions, and then we'll go through some of the questions that have been sent through. Andy?
Thank you, Grant. Hello, everyone. Good afternoon. Thanks very much for taking your time today to join us on the call. Grant has touched upon a number of the 2018 successes and 2019 forward-looking projects. I'll go into a bit more detail, run through the operations briefly, and then we can address some of the questions that we've received. Starting with United Greeneries, as most of you know, UG is our licensed producer. We currently operate out of the Duncan facility with an annualized production in the 1,000 kgs of premium flower annually coming out of that facility. The facility is currently undergoing expansion. We're adding in modular succession 4 additional 2,500 square foot modules. This will triple the production capacity of the Duncan facility to about 3,500 kgs targeted by the end of 2019. Our overall expansion plans for United Greeneries and for our premium craft cultivation target 20,000 kilograms of production by the end of 2019. So the first piece of that is the 3,500 kgs of Duncan. We expect that completion of construction of all 4 of those modules will be by the end of Q1 2019, and that will be in full cultivation there by the end of Q2 2019 to get to that 3,500 kgs of production out of Duncan. As some of you may be aware, we have our Lucky Lake facility. The Lucky Lake facility is a 60,000 square foot fully funded build out of an existing building. When Grant and I joined, that project had currently, or at that time in July, had currently been static. We reviewed the projects, as Grant mentioned. Lucky Lake was one where the facility was in very good shape, and we have commenced construction there. We've recently retrofitted the roof, and construction of that facility is ongoing. There will be a little bit of a break over the holidays here, as you may appreciate, but construction will continue full speed in January. That facility will produce about 8,000 to 12,000 kgs of, again, our premium flower per annum by the end of 2019. What we're doing there is dividing the 10,000 square foot existing rooms that are there into grow rooms that are similar to the size of Duncan. So we're effectively taking our Duncan model that has been so successful for us with our fine growing team there, and we are simply expanding it into the Lucky Lake facility. Construction we expect to be completed by the end of Q2 2019, cultivation targeted to begin Q3 2019, and we expect to be fully operational with cultivation across all rooms by the end of 2019. And again, that will generate between 8,000 and 12,000 kgs of our premium flower annually. The interesting piece, or the additional piece of the Lucky Lake property, it's a 23-acre property. It also provides us with the opportunity to do outdoor cultivation there. And that's where we are currently considering adding hemp in an outdoor cultivation there to source CBD for a number of the product developments that we are working on that Grant spoke of briefly a moment ago. We've received excellent support in Saskatchewan from both the provincial and municipal governments. That support comes in a number of ways. There's financial credit and incentives to the tune of about $2 to $3.5 million on that project. So we're very pleased with that. Infrastructure cooperation in getting the services that we need on a timely basis to have that facility fully operational. Labor assistance, particularly from the province and some of the surrounding communities, where you'll appreciate that cultivation and farming are rich in historical experience of that local labor force. And last but certainly not least, academic and educational support from the surrounding universities, who also excel when it comes to cultivation and agronomics. So we're looking to take advantage of those benefits as well. The additional supply, or the remaining 5,000 to 7,500 kilograms of premium flower, we are currently sourcing from relationships we have in Ontario, working with a couple of facilities there, which will give us effectively an operational presence across the country in BC, Saskatchewan, and Ontario, and achieving the 20,000 kilograms of premium flower by end of calendar year 2019. As Grant mentioned, one of the cornerstones of our strategy moving forward is to establish a house of brands and selling a variety of different products. We are, as I'm sure you are, awaiting regulations and legalization as to what those other products will look like. But we're preparing for edibles and beverages. We're preparing for lotions, creams, cosmetics. We're preparing for the pet industry, and of course, the oils, tinctures, and vape pens, the latter of which is still awaiting legalization. As a result, we recently signed an agreement with Valens for extraction and product development, and we're currently in advanced discussions to secure supplies of both THC and CBD to support this extraction strategy. I'm going to turn to Satifarm briefly now. Again, when Grant and I came on board, Satifarm was a relatively undeveloped asset. We happen to think it is the gem in the portfolio. We've recently hired an entire new team over there in our head office in Ireland. Jonathan Hartsham is heading up that project as the president and head of global sales. We've added a marketing person and accounting support there. The product itself, if you're not familiar with it, it currently is comprised of two SKUs. One is a 10 milligram CBD infused capsule. The other is a more pharmaceutical level 50 milligram CBD infused capsule. The 10 milligram capsule, which is the bread and butter of the program, has recently undergone a reformulation due to regulatory changes in the EU. We have very recently sourced new supply of CBD from Eastern Europe and have been able to achieve reduction in our cost of goods there. The first run of that capsule took place earlier this week, and we are currently in negotiating distribution relationships with a number of large retailers across Ireland, the UK, and the EU. And that 10 milligram capsule will be in stores early Q1 2019. We're very excited about that product and its rollout. We also are currently aggressively pursuing bringing the capsules and the gel pel technology behind them into Canada. There are a couple ways to do that. The quickest and perhaps more challenging is to actually import the finished product. That is something that we're currently examining now. And secondarily, it will be actually bringing the manufacturing capacity into Canada itself. That's a larger project. We're excited about the ability to do that and get the gel pel capsule manufactured in Canada for distribution, both in the Canadian, the US market, as the Farm Bill comes into finalization once the President signs that legislation. The relaunch of those product lines, as I mentioned, the 10 milligrams will be in January of this year, or the coming year, and the 50 milligram capsule is still currently available in Australia and New Zealand in small markets. It is targeted to strategically to childhood epilepsy based on the clinical trials that we had much success with through our relationships in Israel and the research that was being done there by MMJ Phytotech. In addition, Satifarm will also be launching new products at the end of the first quarter of 2019. So keep your eyes open for announcements in that regard. Dreamwater, when we acquired Dreamwater in May of this year, it had an established street knowledge, but again, it was a significantly underdeveloped asset. Grant mentioned at the outset one of the pieces of the puzzle that was exciting for him when he joined, and that was taking a product like Dreamwater that had an entry-level market and expanding that. Since we've joined, we've put in place a new leadership team at Dreamwater, including Tucker Wright and Gord Davey, among others there, a new sales team, and a distribution network. Gord and Tucker and their colleagues have been working diligently expanding our retail distribution network across North America, recently having added Publix in the United States, Walmart, as Grant mentioned, and others, and among our existing relationships that exist with Shoppers, Walgreens, and 7-Eleven. So we've seen, and we're very excited about the expansion of Dreamwater in its current formulation as a sleep aid product into even broader and additional markets in North America. As you will appreciate, the original plan with the acquisition of Dreamwater was to infuse that product with CBD. The research and development on that formulation is ongoing. As I mentioned a moment ago, we continue to await the announcement from Health Canada as to the regulations and when that will be available. It may be the United States market with the passing of the Farm Bill presents more immediate opportunities for us to distribute that type of product in the US as well. In addition, with Dreamwater, we're currently setting up international distribution agreements around the globe, so anticipate that the product will catch on both in its existing formulation and its new CBD infused formulation where permitted in those markets. The last item I'd like to touch on is our investment in Burb. Burb is a BC-based retail operation. It has a phenomenal team behind it. It was a great concept when we first sat down with the Burb folks. It was a meeting of the minds on a premium retail presentation. They did a terrific job. Recently recognized by Forbes as one of the top trending, Forbes magazine, but as one of the top trending names in the cannabis space. So we're excited about the Burb opportunity. They are in the process of opening 2 immediate stores in British Columbia, working diligently with the province of British Columbia as it comes online with the establishment of retail operations. They will be anticipate opening between 8 and 10 stores by the end of 2019, and we'll also be looking at, or are actively looking at, retail opportunities both in Saskatchewan and moving further east into Ontario. Again, dealing with the application and access opportunities as they are being rolled out by the provinces across the country here. I think that's everything that I had at this stage. Grant, I'll hand it back to you.
Okay, great. Thanks, Andy. I think that gives everyone a solid understanding of each of our divisions, and you know, there's been a tremendous amount of work that's been done in the last five months or so. So I think perhaps now we just dig into some of the questions we've received. I'll read out the question first, and then between Andy and I will provide an answer. So the first one, which is obviously top of mind. Considering your current market cap and enterprise value, have you been approached by any of the big players to be acquired? So the answer to that is yes. Considering the assets we have, including our cash position, at these prices, we are certainly an acquisition target. However, both senior management and our board are focused on building a successful company. We're focused primarily on execution, and that's our objective. It's really not it's not about being acquired or acquiring. Also, considering this industry is in a stage of high growth, everyone is entertaining discussions on both mergers and acquisitions on a regular basis. It just comes with the territory. Our job is to ensure we only consider transactions that create the most value for our shareholders. Next question is, how do you expect to compete with a smaller facility compared to other LPs? Well, as stated a number of times, we plan to have a run rate of 20,000 kgs of premium quality craft cannabis by the end of 2019. And with that, we'll be able to create our high quality house of brands that focus on value-added products. What we may not have mentioned in as much detail is we also plan to augment that capacity with lower cost production to satisfy our production requirements in other further processed categories. And that lower cost production will come through greenhouse and or outdoor grow. We have focused on quality from the start, and we believe anything other than premium flower will be the first segment to be commoditized in short order. And unlike a lot of other LPs, we already have 2 other divisions with Dreamwater and Satifarm that add significant value and revenues. The next question was, will you be raising any funds in the near future? Well, as of the last financials, we had 48 million in the bank, which means all our expansions are fully funded, and we have significant funds available for both strategic acquisitions and other accretive transactions. Right now, we do not need to raise any funds. However, depending on what transactions we choose to move forward with, there may be a need in the future. Why did you decide not to move forward with Aldergrove? Well, we decided against Aldergrove for 2 strategic reasons. Municipal regulations are one, and following our review, it was not going to be a cost-effective production facility. From a capital allocation perspective, moving forward with Lucky Lake and Duncan expansions is all we were comfortable with at this stage. Next question. You have been very quiet recently about your outdoor strategy. Do you still intend to move forward with Lillooet and maintain a first mover advantage? While outdoor cultivation remains part of our strategic plan to source low-cost production, and we do continue to explore the opportunities, not only in Lillooet, but also in the prairies, as Andy touched on, and Ontario. The next question was, why are our Gelpel pills not available in Canada as of yet? To summarize what we've mentioned already, our first priority was to have the product reformulated and produced and available for sale across the EU and the UK. Now that that is complete, we are focusing on international markets, Canada, North America, and beyond. Another question was that Satifarm had no revenue for Q1 2019. We mentioned that there was a reformulation that had to take place. There was a negative entry on the revenue side as a result in Q1, but we will see revenue starting to generate in Q2, and then our forecast for Q3 and Q4 look very favorable. The next question is, when do you plan on having oral oils, which are legal now, products available in Canada and specifically Ontario? And interestingly enough, in the last hour, we've been made aware that the new regulations are allowing cannabis topicals as well, which certainly fits into our strategy as well. And the answer really to the question is, the reason we entered into a strategic alliance with Valens was that so that we could start building out different products that are legally regulated, which are oils and other products as well. And we believe that Valens is one of the leading extraction companies in Canada, and we look forward to working closer with them. Next question is United Greeneries the current supplier for Satifarm Gelpel CBD ingredients? The answer to that question is no. Currently, we source raw materials for Gelpel production out of Eastern Europe. It's processed in Luxembourg and then manufactured in Switzerland. Due to a lot of the regulatory hurdles, we plan on producing Gelpel with Canadian extraction, and we will continue to look for international sources of supply for our European and international business. Next question is, the upcoming introduction to the edible market and vaporizer market is expected to be very large. What is Harvest One's plan or outlook into entering this lucrative market? The best answer I think I can give currently, just to supplement what we've already mentioned, is we are currently developing relationships with manufacturers, and we plan to enter the market with a number of products in a number of categories. Do you plan on conducting any more clinical trials using Satifarm Gelpels? At this stage, no. A third clinical trial would be extremely expensive, and we can sell Satifarm capsules now as a nutraceutical throughout the EU and in most regions, including Canada. Also, with the Farm Bill passing, we are pursuing options to sell this current product in the US. That being said, down the road, we may look into further phase 2 clinical trials, this time to address other ailments such as pain and sleep, which are obviously big categories for CBD and THC. And once again, it's down to finding the best use for our capital. Next question is, Dreamwater was an expensive transaction. Are you confident it was worth the money? I'm going to tell you that our job is to create value and create value for shareholders. And Dreamwater was a very underdeveloped asset with ideal synergies within the cannabis industry. It may have been expensive at the time, but with the revenue forecast doubling this year and with launching new CBD infused SKUs, it won't be long before Dreamwater proves to be a very valuable transaction to Harvest One. It's also important to note that Dreamwater already has shelf space in more than 30,000 stores and contracts in place with some of the largest retailers in North America. With the Farm Bill passing, these well-established relationships will be invaluable when others try to compete for limited shelf space. The next question is, when will Dreamwater be available across hotel chains, and how far off are we from having infused drinks with CBD and THC? Well, I touched on that a little bit already. The team is working currently with a number of strategic partners in the travel and tourism industry. So stay tuned. We believe this is an important opportunity for us and a channel for us as well. And we're investigating it currently. And we are currently in talks and working on, as Andy mentioned, working on new formulations for Dreamwater that we can sell in jurisdictions where it's legally allowed. And we will be working towards having a product available when the regulations allow in Canada as well. Andy, this is probably, you can touch on this one if you don't mind. Lucky Lake, what startup problems are you experiencing? We figured it would be up and running by now. I think you pretty much answered that in your notes. Is there anything you wanted to add to that?
You know, just to expand briefly on that. Again, when we came on board in July this summer, Lucky Lake was not under activity. We immediately went to the town with our president of United Greeneries, Todd Day, and met with the local political leaders there, met with the province of Saskatchewan, and we've been actively getting permitting in place, getting construction done that we could do in advance of that, retrofitting the roof. That has all been completed. As I say, the construction will continue following the holidays. There's a bit of a break for the holiday currently, and then our teams will be back in there full throttle come the beginning of the new year.
Thanks, Andy. Next question. Your product is currently one of the most expensive products on sale at the OCS. Do you envisage this price coming down? So I'd say our pricing reflects the premium quality, and we've heard from the provinces, private retailers, and consumers that our Royal High products are some of the best flower from any of the LPs. Will our prices come down eventually? I believe the prices in the entire market will come down as capacity comes online, but our prices will still reflect a premium product. Next question, are you currently looking at US assets, especially now that the Farm Bill has passed? The answer is yes. We're evaluating many deals both in the US and abroad, and if a deal makes sense and aligns with our strategy, we're committed to making it happen, regardless of the geographic location. And I think we've just got two more basically. So the next one is something that I think is important that we address, and a fair point. Shareholders are frustrated with the lack of updates and transparency from Harvest One. Can you please comment? So as I mentioned, fair statement, but as I pointed out earlier, we have been inwardly focused over the past few months trying to make sure everything's in place to execute on our strategy and become a profitable company in 2019. We're now at this point where we can provide more clarity to the market, which is highlighted by today's call. We'll continue to increase transparency as we head into 2019. And along the similar lines, I've been very patient with the share price over the last year, but with so much opportunity cost out there, can you explain some catalysts over the next few months to stop me selling and buying elsewhere? Well, first of all, thanks for your patience. The first reason to stick with us is that our enterprise value in comparison to the other cannabis companies, our enterprise value is currently below our asset value, and our cash position is approximately 60% of our market cap. What does that say? From fundamentals alone, there's very little downside, and we believe only upside to our share price. If we continue to execute on our strategy and deliver on our objectives for 2019, which we will, Harvest One's share price will perform strongly against other companies whose fundamentals are skewed in the opposite direction. Did you want to add anything, Andy?
No, thanks very much, Grant. The only piece that I did want to add, since coming into or getting onto the call and coming into this discussion, it's been brought to my attention that the regs that we're eagerly awaiting have come out from Health Canada. So that's exciting news. We've been anticipating those reg postings for some time now. My hat's off to Health Canada and their efforts to get them out so that LPs like Harvest One can begin preparing for and expanding on their product lines through 2019. Obviously, it's too early to make a substantive comments on the regs as they're just recently out, but we will be actively engaged in the coming weeks in the consultation process. What I can say is that we've been very clear. I think Grant has reiterated throughout the call today. We see ourselves as a house of brands that includes strong presence in the health and wellness space. We are particularly happy to see that cannabis topicals have their own reference in the regulations. It's an area where we think we have some strengths and look forward to working with our partners in those fields and developing those products and bringing them to market when legalization occurs. We're excited about moving through this process and getting our products into the hands of consumers as fast as we are legally permitted to do so. I think it's a great, just to sum up, a great development today and one that we will be pursuing aggressively in early 2019.
Thanks, Andy. Well, that just clearly highlights how quickly this industry is moving. So that's good news for us and good news for consumers. So with that, I'd like to wrap it up. I've been told that this conference call will be there'll be a recording which will be made available on our website shortly. And then last, I just seriously like to thank everyone for joining. Happy holidays and look forward to a successful 2019. All the best.